We can hear
From
you. We can hear you. Just
all right, from this time frame now, we can see this 15 minutes now, we can see the trade was running on a bullish run from here, from this position. Okay, so from here
remember to use the annotation I
upward.
taught you. Use the annotation to know your.
Yeah, I hope you guys can see the red line I just drew now. So the trade was going on a bullish run, then it came up to these positions,
Yeah,
then it started actually. So now this is what we call an accumulation stage. This is what we call an accumulation stage. The whole thing happening right there. All this is called accumulation, whereby the market comes from a bullish run. Um, all right. So the market was on the bullish run before it came to these positions, whereby the market was now going up and down. It was ranging. It's called an accumulation stage. I hope I'm correct. Or that's the way I understand it. So then again,
you mean that
you know,
region, right?
yeah, that region. So after that, after some minutes, some hours, the market started going down. That's it come down as a bearish market. So basically what I do in my scalping is I trade these accumulations on 1 minute time frame. So you guys should like bear with me. It's just
That place you're talking about is distribution state.
the distribution stage, right?
Yeah. When it happens on a resistance, when it happens from a bullish run, it's distribution. When it happens after a bearish run, it's accumulation.
Accumulation. Thank you. So I know I can't differentiate between the bullish and the bearish run, but I just know it's all means the same thing, or only bearish accumulation. So this can also be classified as an accumulation or a distribution stage. On 1 minute's time, I'm trying to expand the screen now. Okay. Hello, can you guys see this now? All right, so I'll just continue. I hope you guys can see it. Now let's assume this trade now, I was in this trade coming all the way from here. You guys should bear with me. Okay. So let's say I was in this trade
Yes, I do use.
and I was in here trading, I mean, on a bullish market. So the trade went up, crashed a little here, and then continued going up. Okay, so my phone is having issues. All right, so Hello.
I can hear you, but I think this is your phone issue is really slowing us down.
Just having, I don't know, maybe because of the background apps, they are making the whole thing slower.
Okay, okay. Henry, let's have it this way. Can you hear me?
Yeah.
Henry, are you there? I think
Yes, I can hear you.
we should let you. Maybe you wait for the second session. Are you getting me? This meeting should
Okay.
time out anytime from now. You can log out, restart your phone so that maybe all the cache and everything will reduce. You can restart your phone. And when we start the second um when we start the second session, you will now start explaining all over again.
All right.
Okay.
All right. No problem.
So while we are waiting for that, let me quickly share my screen so that I will use that to cover for that timing. Let me quickly share my screen and show us something. All right. So please, can we see my screen? I believe we can see my screen because I'm checking with my laptop. Okay. Now, if you remember in the evening, I sent this picture to the group. I sent this picture to the group, and I think he has logged out of the meeting. Okay, so let me show us something. Now, on this 4 hours time frame, okay, you will notice that I I drew a box, a big rectangle box, okay, and looking at the 4 hours time frame, it looks like that place is an accumulation happening there, even though it has been what's the English now? It has been there's this English I'm looking for. It has been invalidated kind of because of the 200 moving average. My 200 moving average is the white line there, okay. So at first, when this particular candle here, this last H4 candle before the current H4 candle, when that candle was forming, it broke that place. So I was expecting it to close on top of it and possibly form a retest on top of the 200 moving average. Then I will assume that the ascending has started. I think somebody posted that picture. So I screenshotted it and picked it up from there. So I was expecting that it is continue buying. So I took buy based on what that person posted. I took a buy at the close of the 1 hour candle this time around. I took a buy because of the force with which that buy was happening. I took a buy that later hit my stop loss because the sell now started. It hit my stop loss out. Okay. Now, when the 4 hours candle closed and the new one was going to form, it closed. Let me see if I can zoom this page. Okay. It closed, excuse me, closed somewhere around the top of this market here. So when it closed as a what? As an inverted hammer, very strong inverted hammer. You can see the force with which the market came down. So like I was explaining to the guy in the group the other time, it is not the name of the candle that really matters. It is the psychology behind that event that matters. Now, for 4 solid hours, market picked up from this support, okay, and see the force with which the momentum with which it went up, broke this other resistance, this resistance zone here, broke it, okay, and use force to break because me, I had sell limits. I think I had sell limit here. I had sell limit here because of this 50 moving average, that yellow moving average there. I had my sell limit there. And also I was seeing the upper Bollinger Band too. So I was like, no, I was seeing the 200 moving average too here. So I confidently placed a sell limit at the top here. At that point in time, Lord Sugar was in a buy. All right. But I wouldn't question it because I know the force with which market was coming here was very, very strong. But I was anticipating that since I was seeing all these military forces here, Let me clear my screen so that it looks clearer a little. As I was seeing my 50, I was seeing my upper Bollinger Band, I was seeing my 200. I expected was market to start selling here. And don't forget, this rectangle here is already a resistance zone that I marked out. So I was expecting market to start crashing from there. And unfortunately, it kept going up till it hit my stop loss a little above the 200 moving average. Okay. Now, after that happened, can you see the way market now crash landed within few minutes to the close of that candle? So that is to validate the statement I told us in the group that close to the o'clock, whether on 1 hour or on 45 minutes. In fact, I mean on 4 hours or 1 hour, most times close to the o'clock, there's always turbulence in the market. Okay, to lead to the formation of the new candle. Somebody following what I'm saying? All right. So after that happened on my bigger account, that was where it happened anyway. So now on this my small demo account, I know you guys remember I said I'm still on demo for the rest of the year. I'm just practicing the things I'm reading. That when I come up in January, market is going to make a little more sense. Now, looking at this chart again, you can already see a W forming here. 1, 2, 3, 4. Okay, this is a clear cut W here on 4 hours. All right. So those that saw this trade at this point here, they did well by taking that risk, because you see that there's a mini support around there. We have 10 minutes to the end of this call. So when the meeting times out, we'll join in with the same link, and we'll have Henry take us off from there. So after this candle closed as an inverted pin bar for me, I took chances between where it closed, because I saw that it ended around my 50 moving average. So I took a buy here. All right. I took a buy, and my target was to get out around here. Don't forget, this is a 4 hours time frame. Okay, so I took a buy at the edge of this my rectangle here, and I targeted this place. Along the way it cashed, I took another position, another two positions. I was calculating to make $30 on my account. So let me show you what happened. Can you see what happened here? I took this place before. This is 1936. That's 19. That's 836, 840, 838. So you can see I took this ones at 836. These two positions at 836, and my intention was to make $10, which is $5 on them. On the other two positions, I was calculating $10, and you see the price entry. I ended up at 10,800 and 10,813. Okay. Now let's look at it again on the chart and see where those places are. 800, 10,800, right? So my 10,800 should be somewhere around. Let me use this to do it. 10,800 should be somewhere like. Let me be precise. 10,800. Okay. So you can see where I entered that market. Just this current H4 candle was what decided it for me, because I saw where the former H4 candle finished his journey. Okay, so I took my chances there, and my calculation was for this place. My anticipation was for it to get to this top here to give me the $30 I needed. So I created how many positions? Now you will see that I had 800 and I had 830. I entered at 800, and my plan was to get up at 830 on the main position. But because of the 200 moving average, my white line up there, I knew that that place is a dangerous zone. But I just quickly wanted to take my trade based on the 50 moving average, the upper Bollinger Band, and the 200 moving average. Okay. So what I did was to split my positions back into the one I entered at 800. I calculated it getting to 820 at 0.5 lot size. From 800 to 820 is, let's say, 20 pips divided by 2, because 0.5 is like saying you are doing 0.5, which is 1/2. Okay, so if I had two positions from 800, all right, if I had two positions that I entered at 800 and I want to get out at 820, That is what? 20 pips. If I divide it by 2, that is what? 10 pips. So on each of those trades I entered at 800, I was calculating, I was expecting $10 on them. Okay. Now, the second position happened, I took it at 813. So let me quickly move this other guy to 813. Just give me a minute. I'm sure I'll finish before the time's up. Okay. So let me move this guy to 813, where the second position. Excuse me. All right. So you can see the second entry. It crashed to that point for me. The first position started at 800. Then a crash happened and I saw that it was still within the safe zone. So I entered 2 more positions and calculated $5 for that. So that on the long run, instead of the first 2 positions giving me $15, I was calculating because, like I told you, my take profit was on 830 from 800 from 10,800. My take profit was 830. So that was supposed to give me $15 on the 2 trades. Now I knew that that place was dangerous. So what I did was to reduce the take profit of the original 2 that I started, reduce them to 20 pips, then take another entry at 813 to give me my exit of $5. Okay, so that was what finally happened there. That was what finally played out here. You can see that it was almost exact $10 and $5. I'm done on this account. Okay, so this is to buttress a part I read in the book I read today, that before you enter a trade at all, you must predetermine in your mind that this is how much I want to gain and this is how much I want to lose. It is not a must that your trade takes the whole run. Okay, you are not in competition with anybody to say, oh, I expected that this trade was going to get to Kilimanjaro. Okay, just to prove to anybody that you are good. You don't need all that. Calculate your precepts, calculate your trades. All right, you can get to where you are going earlier by managing your risk well. Okay, so there's nothing you're trying to prove to anybody that, okay, my analysis went this far. What is most important is you know that it's going to get this way and it went that way. So it's not about I made $20,000, I made $100,000 today. You did an analysis that played out. It is a lesson to be learned. I remember that the same sell limit that I placed, I think it's about this place, 10,850 or 10,845. When this first crash, let me look at that place in the market. I think it was this guy, this particular candle here. When I set that sell limit here, I saw another person in another group that took the same sell limit and was expecting market to come and repeat the same thing here. And you know that that trade went against that guy and hit the stop loss, only for the trade to now later play out. Okay, so me, I was telling you that when I woke up this morning, I saw that my moving averages have shifted because then all of them were at the top here. Let me clear this here so that it looks clear. All of the moving average, you can see them here now. This was why I placed that sell limit that later gave me this trade. Okay, so this guy too also analyzed and expected that the same thing was going to play out here. But when I woke up this morning, I saw that my moving averages have shifted. So I knew that market is changing is a gimmick. So I have to replan myself. Okay, and so yeah, I've deleted that trade, the pending order for the sell limit. I've deleted it. I took instant trade, okay, today, and it went against me. But I've recovered this now. Yes, oh, actually, even remind me, I have that trade running somewhere else. I need to quickly check that. I have that trade running somewhere else. So I hope somebody is getting one or two things from what I'm explaining. Oh my, okay, this trade went really, really against me, but I'm still expecting it to get to where I hope it will get to. Okay, so you can see the settings I did for it, and this is what I'm hoping to happen. But anything can happen in the market. You can see I already have my things set. So this is just one of the ways where I see support and resistances helping me to manage my risk. And most importantly, the moving averages are really, really helping me to maneuver my way through. It's not all my trades that will be right. It's not all your trades that will always be right. But when you are taking your trade, you want to have it in your mind that what if this trade goes against me? How much am I willing to lose? Even before you enter it at all, you want to say, okay, how much am I willing to lose? So you have that in your mind when you are taking your trade. Okay, then how much am I expecting to gain? You have that in your mind before taking that trade at all. So if you do your analysis, you now calculate what you are willing to take, what you are willing to make, and what you are willing to lose, and you see that okay, this market is going to go past it, but me, I want to get out at this level. It's better to get out at that level and keep the change you have already made, and wait for the market to still play out what you want to play. But at least you have kept something in your account for yourself. So this is the psychology I want us to work with. I have an experience with somebody that I hope that person is in this call. Let me see if I can use this remaining 1 minute to discuss that. We have been singing lately, and many times we have been talking about the psychology of trading. Many of us we see this trading as if uh, it is it is gambling, it is bet Nigeria we are playing. No, it is not like that. It's a business. It takes a lot of calculation. All right. We have 1 minute for this call, so I might not be able to tell this person's story. But let's hope that maybe in the next session I'll be able to tell. So please, when this meeting times out, let us click to join back in using the same link. If you have enjoyed the class so far, please type 702. Let's do that quickly before the meeting ends. If you have enjoyed the meeting so far, 702. Let's do it. Let's do it. Let's do it. 702. If you have enjoyed the meeting so far, type 702. All right. So we'll come back as soon as the meeting times out. Only one person is